Well, I have great news for you. In today's conversation, I want to speak to you about huge business loans for bad credit, up to $10 million. And I want to compare and contrast Cashbloom, Reliant Funding, and IOU Financial. Don't go anywhere. You're going to love today's conversation. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you're all doing fantastic. I'm doing marvelous. If you were to ask me, if you are doing as great as I am, go grab a cup of coffee or a tea or vodka and let's roll. In today's convo, we are going to look at three players, three business lenders. We have Cashbloom, Reliant Funding, and IOU Financial. And those three players, they can lend you up to $10 million. And it doesn't matter if you have bad personal credit or bad business credit, doesn't matter. They have specialized in providing huge business loans for bad credit. One thing that's very important to understand is that the huge business loans for bad or fair credit up to $10 million guaranteed approval that I'm going to talk to you about, you can find them with other players. But we love Cashbloom, Reliant Funding, and IOU Financial because they've been doing this for a while and they were really fast. They will grant your application really fast. One thing that's very important to understand is that when you talk about huge business loans for bad credit, you are actually looking at a broader picture. You have a larger constellation of business loans, and you are looking at anything from merchant cash advance to invoice financing to invoice factoring to equipment loans to lines of credit to term loans. So don't think when I speak about business loans, don't think about only term loans. No, you got to think bigger here because when you have a business, there are a lot of things you might need money for. Let's say you want to buy equipment. You don't have to borrow a term loan for that. You can get equipment financing. In other words, you are collateralizing. You are using the loan as the collateral for you are using the loan. You're using the asset rather as the collateral. Okay, and by doing that, and if you're lucky, you get a lender who agrees to do an LTV of 100%, a loan to value of 100%. You don't have to spend any money. So what I'm trying to say here is that when we speak about business loans for bad credit, I want you to look at things more broadly. Okay, not just term loans, but also other types of loans. This is very important, and it doesn't matter whether you have an established business or you have a startup. No, it doesn't matter. The loans are the same and the requirements are the same. One thing I also want to tell you before I actually get into the actual review here is that it doesn't matter what kind of stage your business is. You need a few things if you want to improve your chances of getting a loan, a business loan, that is. And I've always said it before on other shows, you got to have a business plan. This is so important, folks. This is so critical. Don't be stingy. Don't think about, I'm going to spend $300 or $500. I'm going to give somebody some cash to write a business plan for me. No, this is an investment. Think about it. If you're getting a $10 million loan, business loan, why is it costing you so much? Why are you so stingy about spending $300 or $500? It's an investment. If you can't do it yourself, hire someone. You can hire someone locally. You can hire someone on the internet. You go to Fiverr, you go to Upwork, you go to all those gig websites. You have freelancer.com, or you can even get software. You have software like a LivePlane. You can customize things yourself. It's very easy. DIY is very easy. You can get InLoop. You can get LivePlane. We have actually reviewed those software tools on other shows. But my point is you need to have a business plan. You got to have a solid business plan. You need to also work on building your business credit score. You got to work on improving your personal credit. And once you have that, you want to pay attention to the loan options. When we speak about huge business loans for bad credit up to $10 million, Whether you get the loan from Cashbloom, Reliant Funding, or IOU Financial, there are a few criteria, a few quintessential criteria you need to pay attention to. For example, what are the loan options? Don't minimize that. This is important. You want to pay attention to the eligibility requirements. Does your business, does your startup, does your established small business qualify for the lender's eligibility requirements? You want to pay attention to costs. Please write them down. You can use you can have a spreadsheet. Put down the cost. When we speak about cost, we talk about a lot of things, not just the APR. A lot of folks make a mistake of thinking of cost as just the APR. No, you have things like underwriting fees, origination fees, closing cost, additional fees, down payments. Even though down payments not really a cost, but what I'm trying to say here is that anything that is a capital outlay. It's a cash outlay. You got to think of it strategically because your business needs money to survive and function. So you have to be very strategic about the amount of money you spend on other things, right? So costs also include the actual interest. So all of these things make up what is known as the APR, the annual percentage rate. You also need to think about the customer service of the company you are going to get the loan from, right? Thank God. The three players we are reviewing in today's show, Cashbloom, Reliant Funding, and IOU Financial, they have stellar customer service. So we're cool on that front. You also want to think about the how many years you need to be in business to qualify for the loan. How much money do you need to generate in revenue every year to qualify for the loan that you are pursuing? All right. Before I get into the actual review, please check out our short evaluation video about how we categorize, how we review, how we list business loans and personal loans on this show. Check this out. Okay, let's now talk about Cashbloom. When you think about Cashbloom, I want you to think about one thing. They are an alternative business funder, and what they do is that they provide short-term working capital. They give you merchant cash advances. They also work with you sometimes on lines of credit. It depends on where you are located in the country, and they are very flexible. This is a lender that's very, very flexible. Minimum credit score here, 490. Yes, you heard it right. Minimum credit score to qualify for a business loan, for a huge business loan from Cashbloom, is 490. The minimum time in business, less than 1 year. The required annual revenue, $100,000. The borrowing amount, it goes from $50,000 all the way to $1 million. In some cases, $10 million if you have the right loan application. Again, you have to have a stellar loan application, replete with all the documents they need, everything they need. You just gotta be like so ready if you want to get the 10 million. And the minimum time to funding is 1 day. All right. And we love the fact that with Cashbloom, you have a constellation of benefits. For example, they lend to new businesses. So if you're a startup, no problem. If you're a startup with bad credit, that's not a problem. They look at the totality of your application, not just the one aspect of things. And they will fund you within 2 to 7 days, in some cases, even 1 day. They do have relaxed credit score requirements. We love that. In terms of their drawbacks, they're not really transparent in terms of their fees. Like, we had to contact them to ask them what their fees were, but it's not clear on the website. And also, they do have a high factor rates. So something you need to think about. And we love the fact that this is a lender that operates both in the United States and Canada. So if you have a business where you are operating from both countries, you can qualify for a loan from Cashbloom. That's even better, okay? One thing for sure though, folks, when we speak about alternative business funder, what that means is that the key word here is alternative, which means what? It means that the rates will be high. Don't even expect them to give you low rates. Sometimes you might qualify for rates that go all the way to 35%. Okay, unless the loan is collateralized. If the business loan is collateralized, then the rate goes down because the lender understands that if something happens, you don't pay the loan, they can always resort to repoing, repossessing the asset. Speaking about loan rates and all the fees, let's dig a little deeper here in terms of the terms and fees of Cashbloom. So, borrowing amount 5,000 all the way to 1 million, in some cases up to 10 millions. The term length 3 to 24 months, and they have the factor rate times x 1.2, x 1.5, depending upon the industry. And they do have a constellation of fees. Now, in terms of origination fee, they do have an origination fee. It depends on the loan amount, and it really also depends on the loan type. So, if you are borrowing if you're getting a short-term loan, you wouldn't pay the same origination fee as if you were getting a merchant cash advance, an MCA. And to get an MCA, you know the quintessential requirements, right? You need to be selling through cards. In other words, you need to generate electronic revenue. You need to sell and get your revenue through credit cards or debit cards. You can't be doing a cash business and expect to have an MCA from Cashbloom or any other players for that matter. One thing I also want to say here is that in terms of the application process, it is very straightforward. It's very streamlined. You basically you can begin the application online. You can contact the company itself. We would recommend that you contact them. You can talk to a sales rep to complete your application, because if you speak to someone, you're able to ask more questions so you don't waste your time. In other words, you know exactly what they're looking for, and you can actually do whatever. You can give them the kind of information they need, as opposed to doing everything yourself and just find out at the end that you need more information. Because the bottom line here is what? They are going to contact you anyway. Whether or not you talk to them beforehand, they will contact you to request additional documents. So it's just a lot better to have a conversation beforehand with a customer rep. That way, you know exactly what they need, and you can just provide that data to them. Remember, though, that once you start talking to them, they may have a soft credit check. In other words, they will pre-qualify you based on the info you provided. And then if you decide to go further with the whole process, then you'll get a hard pull on your credit. So again, this is not an EIN only loan. No, this is a business loan for bad credit. So your personal credit will be checked. Your personal credit will get a dent, 10 points or 15 points. But yes, but the money will be yours anyway to do whatever you need to do with it in terms of expanding your business. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. We're actually having a conversation, folks, we're having a conversation about a lot of things. But most importantly, we're talking about huge business loans, and we're trying to compare and contrast Cashbloom, Reliant Funding, and IOU Financial. And I just finished talking about Cashbloom. Now let's review Reliant Funding. And Reliant Funding is also an alternative business funder, an alternative business lender. In other words, they also have high fees. That's just the way it is. And they provide everything from short-term loans to merchant cash advances to working capital loans to equipment financing deals. Okay, their minimum credit score they will accept is 525. Minimum time in business, they want you to be operating at least 1 to 2 years before you contact them. Required annual revenue, $100,000 at least, and you can borrow from $50,000 all the way to $1 million. So this is pretty good. And one thing I want you to think about in general is that when you think about Reliant Funding, there are some pros and cons. So the pro, of course, there is no credit score requirements because a lot of their loans are collateralized, right? You have multiple types of financing available, and you can borrow as high as $1 million. Again, we've seen based on our research, some people who qualify for loans up to $5 million. And in terms of the cons, repayments are required frequently. The loans are not available to businesses in some industries, and the website advertising is not very informative. In other words, they lack transparency on their websites in terms of fees, in terms of cost, all that kind of stuff. And we've seen based on our research that sometimes the application process can be very slow, especially for equipment financing deals, and customer service is not always consistent. So something you need to be aware of. But they do offer everything from merchant cash advances, as I said before, to short-term loans, to equipment financing. And one thing you need to remember here is that if you want to qualify for their equipment lease, because they do have equipment financing, but they also have equipment leasing. So if you're looking for an equipment lease through Reliant, the company can finance new or used equipment, including software, computers, work vehicles, office furniture, fixtures, and point of sale systems. And let's talk about the rates here, the rates and fees. So with Reliant, you can go all the way to $1 million and sometimes $5 million. Usually the term length is 18 months, 6 to 18 months, and sometimes 24 months. In terms of fixed fee and origination fee and APR, they don't actually, they haven't published that, but we think that it must be in the teens, so 15% all the way to 39%. And one thing you need to also be aware of, that if you have a collateralized loan, if you have, for example, equipment financing, the rates tend to go down because the lender's risk tends to go down as well. Remember, they're in the business to cover their ass too, so they have to mitigate the risk of lending to you, especially if you have bad credit, either at the personal level or your business has bad credit. So they need to actually cover their, cover all angles of their business, of their lending business. And one thing I want to say here is that Reliance needs to do a better job in terms of customer service. Overall, we would say that we would give them 8.5 over 10, but there are some cases where some customers were saying that Reliant is not very consistent in terms of their customer service, and they can do better. So Reliant, if you're listening to us, please do a little better. One thing I also want to say is that Reliant will help you in terms of education. So if you have bad credit, they do have resources. They will assign a customer rep to you. You can talk to that person, and that person will help you find the best deal for you, the best financing deal for you. But also that person will help you throughout the loan term, not only in terms of improving your business's credit, because they will report all transactions to the 3 major credit bureaus, okay, business credit bureaus. So you have DNB, Dun & Bradstreet, you have Equifax and Experian. But one thing I also want to say is that that customer rep will help you not only in terms of making sure you pay on time and you are good with your payment history, so they can report positive patterns to the credit bureaus, but that person can also help you identify future needs of funding. All right, so that if you have to come back and borrow again, they will give you better deals and better terms. Now let's talk about the third lender here. We have IOU Financial, and IOU Financial is also an alternative lender, and they focus on small businesses and micro businesses. So if you're going the short-term, non-traditional lending route, you might want to consider IOU. As I said before, whenever you hear the word alternative lender or online lender, in some cases, you have to think about high interest rates. So, and that's the case here. With IOU Financial, the minimum credit score is 530. Pretty decent. And basically, minimum time in business, 1 to 2 years, required annual revenue, at least $100,000, borrowing amount less than $50,000 all the way to $1 million, and the minimum time to funding 1 day. And this is pretty cool when you think about it, right? And what are the pros and cons here? They do have relaxed qualifications in terms of applications, right? They have high borrowing amounts, $50,000 all the way to $1 million. The application process is fast and easy, and we love the fact that they're very transparent on their website in terms of the fees, in terms of what the loan is about, all that kind of stuff. So kudos to you, IOU Financial. That's fantastic. Now, what about the cons here? Based on our research and our calculation and our comparison with other similar lenders, we believe that IOU Financial's rates are expensive in some cases. Some additional fees are charged, and you have frequent repayments that are required, and there is no long-term financing options available. So even though we are talking about 50,000 all the way to $1 million in terms of loan amounts, you're not going to have 10 years to repay that amount. You're probably going to have, if you're lucky, you're probably going to have 3 years. If not, the average is 18 months to 2 years. Okay, so think about that. So in general, IOU is a short-term lender serving small, profitable businesses. So small and micro businesses that are profitable. Very important to understand that. So you got to generate money. You got to generate some kind of cash to qualify for their loans. You know what? They're not stupid, right? They have to make money, so they don't want to lend to unprofitable businesses. So even if you're small, even if you have bad credit at the business level or at the personal level, as long as you're profitable at the business level, you can qualify for a loan with IOU Financial. And let's just elaborate on the rates and fees and all that kind of stuff. So borrowing amounts from $10,000 all the way to $1 million, depending upon the loan application and the sector your business is in. Term length 6, 9, 12, 15, or 18 months. Remember, we're not actually talking about years here, right? A year and a half, that's the maximum. And the borrowing fee 15% all the way to 31% of the borrowed amounts, and the origination fee 7% to 8% of the borrowed amounts. So the rates are kind of high, but this is the kind of lender that you want to reach out to if you have let's say you have identified a huge business opportunity, or you need the cash to do something quintessential to your business's survival. Then the ROI on that particular initiative that you're going to do with the money is worth it. Because as you can see here, I mean, this is kind of high. Think about it. If you're borrowing $1 million and you're paying 31%, that's just the borrowing fee. But you also have the origination fee. Because if you add, let's say you add the borrowing fee to the origination fee, that's 15 plus 8, that's 23% on the lower end of the delta. And then on the higher end, you have 40%. So 23% to 40%. Think about that. That's huge. But that's what it is. If you need the cash, you have to go for that. And we have seen that IOU charges a couple of other fees. So they have a $585 administration fee. They have a loan guarantee fee. They do have a post-servicing fee for such things as paying by check or modifying the loan. They do also have an origination fee, as I said before. And so they do have a constellation of fees that, at the end of the day, they do add up. So it's important to pay attention so that you don't spend the whole loan proceeds repaying IOU Financial back, right? It's like they're giving you $1 and they're taking 40 cents from you. And in 40 cents, that's huge. So be very careful about the kind of loan application they're a great company, which is why we are rating them in the first place. They have a lot of great reviews. We have scored them high on other reviews we have performed on this show. But, and there's a big but, they are expensive. All right, so folks, you've heard it. You've heard the compare and contrast between those three players, right? So I've just finished talking about Cashbloom versus Reliant Funding versus IOU Financial. So which one should you choose? We are at decision time now. We have to make a decision. We have to be adults. We have to be responsible business managers, right? Which one should you choose? Well, it's very simple. We always say here on this show that to choose a business loan, whether it is for bad credit or good credit or fair credit or low credit or no credit, doesn't matter. There are some criteria you need to follow. You need to comply with those criteria to make sure that you are being objective in your loan decision. So you got to look at things like loan options, eligibility requirements, the cost, the customer service. Cost is critical. By cost, I mean everything from the annual percentage rate or APR, the down payments, the factor rate, the origination fee, the underwriting fees, closing cost, additional fees. And what you want to do is you want to pay attention and express that cost the total cost as a percentage of the loan amount. In other words, you want to pay attention. You want to do something like, listen, all my costs will be like 30% of the loan amount. This is important because that way you can realize, oh, you know what? This lender is very expensive. So they're not adding value to my business. Even though I have bad credit, I still deserve better terms. And that will keep you shopping around. And that's what you want. You want to keep shopping around until you find the business loan that you need. You also want to pay attention to the lender's eligibility requirements, because some lenders might ask you for a minimum personal credit score, a minimum number of years in business, and minimum annual revenue. So this is important to know those in advance. And another thing you need to pay attention to in terms of choosing whether you should go with Cashbloom, Reliant Funding, and IOU Financial is that those players, they are serving different niches. Even though all the niches are in the alternative borrowing space, they are serving different niches. So something you need to think about. All right, folks, this is it for today's conversation. Our pick in today's convo is Cashbloom. Our score for Cashbloom, 10 over 10. Reliant Funding, 9.5 over 10. And IOU Financial, 9 over 10. Thanks so much for your attention, folks. I really appreciate it. I will speak to you another time. But until now, remember, stay marvelous.